Okay, taking a live look right now at the big board, the stock market reacting positively after news of that U.S. and China trade agreement. Here's Treasury Secretary Scott Bessent announcing the agreement from Switzerland.
We have reached an agreement on a 90-day pause and substantially move down the tariff levels. Both sides on the reciprocal tariffs will move their tariffs down. The consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade.
All right, so let's get to CBS News MoneyWatch correspondent Kelly O'Grady. Kelly, what kind of impact are we seeing so far?
Well, when you look at the markets, investors are really breathing a big sigh of relief right now. And what has come out of these talks this weekend, everyone that I've spoken to has said, wow, this is a lot better than we could have ever expected. And that's why you are seeing so much green across all of the indexes, particularly in the tech sector, because so much of these companies rely on parts, if it's, the iPhone, or even just selling into those markets. And so the fact that tensions have at least simmered down for the meantime, you're really seeing it reflected in that space. That being said, while there's a lot of excitement, this could also become a little bit of a sugar high, because this is just a pause. And I was listening to Treasury Secretary Bessent on CNBC earlier, and he kept emphasizing that. He kept saying this is a pause. We still need to negotiate this. This is good progress. But maybe you get to the end of that 90 days, because trade deals take a lot of time, and there isn't a deal. That's where some of the investors that I'm talking to are saying, okay, we're excited, but let's see where this goes. I will also tell you the impact, Mugo, that I'm seeing when it comes to interest rate predictions. Originally, we were looking at a potential rate decrease come July. Now the markets are pricing in the likelihood that we don't get a rate decrease until September, because there's just a lot more uncertainty baked in with this 3-month pause.
Yeah, and let's stick with that there, because as you mentioned, Kelly, this is obviously temporary, and some of the damage has already been done. So in what ways are we still facing an uphill battle in all of this?
Well, especially for businesses. I spoke to a number of them this morning. As soon as I saw the news, some got some pretty early text messages from me. And I said, how are you thinking about this? I mean, these folks are planning months and months in advance. They're already planning for the holiday season. So, and when it comes to an uphill battle, you have businesses who are very uncertain. You also have a 30% tariff that's still in place, which is going to be potentially passed down to consumers. It's not 145%. And then you think more broadly about these negotiations. We have been here before. You go back, Mugo, 7 years, almost to the day, under the first Trump administration, the U.S. and China agreed to pause their trade war. And then a few weeks later, things started ramping up again with the tit for tat back and forth when it comes to these tariffs. So it's kind of, we will see where things go. There's some cautious optimism, but we're certainly by no means out of the woods.
Yes, and looking ahead to all of this, because as you mentioned, anything could happen, even though people are very happy to see this movement so far. But after this 90-day period, how critical is it for consumers that a long-term deal is actually done, especially, as you said earlier, ahead of the holiday season?
It's very critical, but it's going to be very hard to do. That deal that I mentioned under the first Trump administration, it took over a year to get it done, because there's so many nuances, whether it's the trade deficit, whether it's fentanyl coming into this country, whether it's American businesses being able to operate in these spaces without having their technology copied. There's so many different things that go into a trade negotiation, egos among them too, that makes it a very, very hard thing to get done and when there's a time limit on it. But yes, for consumers, look, by no means is this not a win today. 30% is very much better than 145%.
Absolutely.
But these businesses are looking to the holidays and saying, I don't know how to plan right now. So we're still in a tough spot, Mugo.
Okay, Kelly O'Grady, thank you so much for all your insight. We appreciate it.